Hey everybody, Smart Silver Stacker here. Today's video we're going to talk about the inflation numbers that we got in May. Had an 8.6% year-over-year increase as measured by the CPI, and that was a bit of an upset, beat all of the expectations, and very notably, the month-over-month increase in inflation as measured by the CPI was 1% in May. So of course if you annualize that, you come out with a number of 12%, and if we start seeing numbers like that, we're going to see the economy have a real hurt put on it. And we're going to talk about all of that in this video. But real quick, do have a little bit of housekeeping for you. If you're in the comments of the video and you see somebody asking you to message them on WhatsApp, maybe their username will look like mine. It'll look like Smart Silver Stacker with a number after it or something like that. That's not me. It's a scam. I know most of you are probably already aware of this, but I don't even have WhatsApp. I don't use it, and I just want to put out this PSA. It's a problem on a lot of YouTube channels. They're the bots, and they're trying to scam you out of money or cryptocurrency or something. But anyway, that's not me, just so you know. Now, the market reaction to the higher than expected inflation numbers was quite interesting. As you can see, most of the major stock indexes here were down in a big way. The GDX was up 4%, 4.76%. And the GDX is an ETF that measures gold miners, and gold and silver actually were one of the few sectors of the market that was in the green on these higher than expected inflation numbers. And that's kind of an interesting reaction. Actually, as the numbers came out, gold and silver sold off like everything else, but they finished the day in the green. They came back. And so, that's not really something that we've seen in the past. For a long time there, it seemed like when higher than expected inflation numbers would come out, gold and silver would tank. They would sell off in a big way and they would stay down for a little while. And I think that was because the market was expecting the Fed to come in and crank up rates and get inflation under control. But now I believe that investors are beginning to realize that's kind of a pipe dream and it's not really going to happen. And, another interesting thing I saw was recently the president was saying that, no credible major economists are forecasting a surge of inflation. Well, Larry Summers, he's the former Treasury Secretary. He was the Treasury Secretary from 1999 to 2001. So I don't know if that qualifies him as a credible or major economist. I would say it does, and we should be listening to what Larry Summers is warning about, because he is warning that inflation now is actually as bad as what we had at the end of the 70s and the beginning of the 80s. And with a lot of these headlines, even this one I just showed you, it says it's the worst inflation, the highest increase in the consumer price index since 1981. And you'll hear a lot of that referenced, the 1980s, the 1970s, how inflation was really bad back then, and this is the worst inflation since then. Well, Larry Summers just co-authored this paper, and the gist of it was that the way that they were calculating inflation back then was flawed, and the CPI methodology is flawed. And back in 1980, the CPI hit 13.6%. But Larry Summers says that the way that the CPI was calculating mortgages and the way that housing prices were factored in there was not accurate. And so he created this alternative index, and the index puts inflation back in 1980 at about 9.1%. Now, why is this important? Well, it means that the inflation we're experiencing now is getting very close to the levels of inflation that were experienced at that time. And back in the 1980s, at the beginning of 1980 and at the end of 1979, Fed Chairman Paul Volcker, he had to crank up the federal funds rate to almost 20% to get that inflation under control. And so if today's inflation is as bad as the inflation that we had back then, and I believe it is, it may even be worse, and I think it's going to get a lot worse because it doesn't show any signs of slowing, then that means in order to get it under control, the Fed is going to have to take similar measures. But one of the big differences now is that there's a lot more debt in the system, and we're going to talk more about that in just a minute. But the point is, I don't think the Fed is going to be able to crank up rates the way they did back in 1979. And, Larry Summers thinks that there's going to be a big economic recession as the Fed tries to get inflation under control. But I personally don't really see them doing that. I mean, I think inflation is just going to run out of control, and they're going to end up sacrificing the dollar. Now, in that vein, there was an interesting tweet from Dotcom, and this is actually a long series of tweets. I'm going to go ahead and just read them to you, and I'll kind of give you my thoughts on them. But if you remember Dotcom, he was the founder of file sharing site Mega Upload, and he was kind of famous for the stormtrooper style raid on his estate back, I don't know when it was, maybe 10 years ago, some time ago now, all over copyright law and how Mega Upload was being used to share copyrighted information. But anyway, that's where this guy gets his claim to fame. And this was a pretty interesting tweet. It says, "This may be the most important thread I ever make, big picture stuff about the major global collapse that is coming. I will try to help you understand why the future is not what we're hoping for. It's worse than most can imagine. Our leaders know, but what are they planning?" And so, get ready, folks, put on your tinfoil hat, because here we go. Let's read what he has to say. The United States did not have a surplus or balanced budget since 2001. In the last 50 years, the U.S. only had 4 years of profit. In fact, all the profit the U.S. had would not be enough to pay for 6 months of the current yearly deficit. So how did the U.S. pay for things? And he's got this chart here where we had a few budget surpluses back around 2000. But since then, we've just had massive deficit spending, and that has been the norm, and we've racked up tremendous debts as a result. He's got a chart here of the money supply. He says U.S. spending and debt have spiraled out of control, and the government can only raise the money it needs by printing it. That causes inflation. It's like taxing you extra because you pay more for things you need, and all your assets decline in value. See the U.S. money printing frenzy. He also says the reason why the U.S. got away with it for so long is because the U.S. dollar is the world's reserve currency. Nations everywhere hold the U.S. dollar as a secure asset. So when the U.S. government prints trillions, it's robbing Americans and the entire world, the biggest theft in history. And yeah, I'd agree with him there. I mean, it's the people who have access to the newly printed currency initially that really benefit because they get to spend it before it's devalued. It is a wealth transfer, and it is a tax. Inflation is a hidden tax, and it is a means of stealing the wealth from the poor and the middle class. He goes on, the problem is that this has been going on for decades and there's no way to fix it. The reality is that the U.S. has been bankrupt for some time, and what's coming is a nightmare, mass poverty, and a new system of control. Let me explain why this isn't just doom and gloom talk. Total U.S. debt is at $90 trillion. Yeah, and he's not talking about the national debt, just for the record. He's talking about total debt. Something you can see here on usdebtclock.org. The U.S. total debt's $91.1 trillion. And if you mouse over, it tells you where this is derived from. And it's the sum of household, business, state, local government, financial institution, and federal government debt. So $91 trillion. U.S. unfunded liabilities are at $169 trillion, and that's Social Security, Medicare, veterans benefits, all sorts of stuff that the government has promised to pay, but that they don't have the cash to make the payments. So, it's all stuff that they're going to have to run the printing presses to finance. And then Kim goes on here to say, combined, that's $778,000 per U.S. citizen, or $2,067,000 per U.S. taxpayer. Remember, the only way the U.S. government can operate now is by printing more money, which means hyperinflation is inevitable. The total value of all companies listed on the U.S. stock market is $53 trillion. The real value is much lower because the U.S. has been printing trillions to provide interest-free loans to investment banks to pump up the stock market. It's a scam. Most of the $53 trillion is air. The value of all U.S. assets combined, every piece of land, real estate, all savings, all companies, everything that all citizens, businesses, entities, and the state own is worth $193 trillion. That number is also full of error, just like the U.S. stock market. He goes on here, says, let's do the math, adds everything up, subtracts the debt, and you get a balance of negative $66 trillion. So that's $66 trillion of debt and liabilities after every asset in the U.S. has been sold off. Do you understand? So even if the U.S. could sell off all the assets at the current value, which is impossible, it would still be broke. The U.S. is beyond bankrupt. The patient's already dead. The patient is now a zombie. You probably wonder, why are things still going? Why didn't everything collapse yet? It's all perception, denial, and dependency. Perception is that the U.S. has the largest economy and the strongest military in the world, but in reality, the U.S. is broke and can't afford its army. The denial is that all nations depend on a strong U.S. dollar or global markets collapse. The reason why the U.S. zombie keeps going is because the end of the U.S. is the end of Western prosperity and an admission that the current system has failed as a model for the world. It doesn't change the reality. The collapse is inevitable and coming. What are our leaders planning? You may have heard about the Great Reset or the New World Order. Is it a controlled demolition of the global markets, economies, and the world as we know it? A shift into a new dystopian future where the elites are the masters of the slaves without cosmetics of democracy? Without a controlled demolition, the world will collapse for all, including the elites. The world has changed so much and nothing seems to make sense anymore. The blatant corruption is out in the open, the obvious propaganda media, the erosion of our rights. What's the end game? Okay, so yeah, real cheery stuff from Kim.com there, of course. But unfortunately, I don't see a lot of flaws with his reasoning. Now, is it a controlled demolition that's all planned? I don't know, possibly. I mean, there does seem to be at least some circumstantial evidence of that, but it could also just be the result of market forces and the normal life cycle of a fiat currency. There have been many world reserve currencies in the past, and all of them have lost that status one time or another due to various factors in the world economy, and it wasn't always a controlled demolition or a planned collapse. So, I suppose that's all just sort of speculation at this point. Maybe some of you think you can prove it. I don't know. It's possible, but it doesn't really matter in my opinion because the end game is going to be the same. It's going to be a collapse of the dollar and a currency crisis. And even if it's not a planned, controlled demolition, I think we all know what the reaction to such a collapse is going to be. There's definitely going to be a central bank digital currency soon, I think. And I don't know how much time the dollar has left. It could be years, it could be months, it could be days, who knows? I don't have a crystal ball. But when you look at these debt numbers, $91 trillion in total debt, $30 trillion in national debt, tremendous unfunded liabilities. And then, here's this one little spot of green here, the savings per family. So if you take the total liquid cash and personal savings and then you divide it by the number of families, it's about $12,847 per family. So that's what we're working with against a debt per taxpayer of $2 million some dollars. So, not looking great. And on top of all this disaster, the monetary policy and the tremendous amounts of debt and all that stuff, there's also this ongoing conflict in Europe between Russia and Ukraine and the West. And this is also putting tremendous upward pressure on prices. Here's an article from the New York Times. Europe's Russian oil ban could overhaul the global energy market. And that's absolutely what we're seeing. The world is being divided. It looks like it's being cut in two at the moment. And one of the effects is that we are seeing much higher energy prices here in the West. And I personally don't really see any sign of this conflict abating. It's looking like it could get long and drawn out. And that's exactly what Prime Minister Viktor Orban, he's the Prime Minister of Hungary, he has come out and said that a gas embargo would destroy the European economy. That's another thing that the EU leadership has kind of put on the table and been discussing, is not only an oil embargo, but also a gas embargo. But, this guy Viktor Orban, I've heard him characterized as sort of a right-wing autocrat, and that's certainly how he's portrayed in the Western media. And I don't think I agree with all of his domestic policies, but he is democratically elected. And as far as his take on this gas embargo and the effects of inflation in the war, I think he's spot on. This is from Hungary Today. And he said that the gas embargo that's on the table, that would destroy the entire economy. And also, he's saying that this war is going to drag on. The war is likely to be protracted. And he added that 2023 would be full of uncertainty and anxiety, and that the world will be tormented by the war and its economic fallout. And it certainly looks like it is shaping up to be the case. And so I would say his take on the economy at the moment is spot on, regardless of what people have to say about his politics. And I've been talking quite a bit lately about how this reduction in Russian energy exports to Europe is going to have a tremendous effect on not only European energy markets, but also in the US as we begin to export more of our energy to Europe. It's going to lead to much higher prices here. And this was a story that we saw this week. There was an explosion at a natural gas facility in Texas. This was a large liquid natural gas facility. It's actually responsible for about a fifth of US capacity to liquefy this natural gas. And, that's how we export it. We liquefy the natural gas, put it on a big ship, goes over to Europe. The natural gas gets regasified and then distributed via pipelines or, whatever other methods to the European market. And the effect of this explosion was actually that we saw US natural gas prices drop. And that is a confirmation of what I have been saying, that the increased exports to Europe will be driving prices up. Now, I mean, I think that that seems pretty obvious on its face, doesn't really require the confirmation, but certainly this is interesting to see the principle in practice, as our ability to export gas to Europe has declined temporarily. We saw our own energy prices go down as well. And it was the opposite in Europe. You can see on this 1 week chart of Dutch natural gas, you can see that when that explosion occurred, there was this big spike up in the price of gas. It's come back down a little bit, but I mean, the important part is here that it illustrates that US markets and European energy markets are linked. As we begin to export more and more gas, I would expect that we'll probably even begin trying to increase our infrastructure and our capacity for these exports. We're going to see a lot more upward pressure on energy in the US, and that's as energy prices are already quite high, and this is going to be a trend moving forward. And so, there are multiple factors which are leading to higher prices at the moment, and that does not bode well for an economy already on the verge of recession. And this was something I saw recently. I saw a few headlines about this. This one is from this website, notesfrompoland.com, but it's about how the Polish government has been encouraging people to collect firewood amid soaring energy costs. And, we're in the middle of summer right now, so just imagine what things are going to get like in Europe this winter. I really think that this winter there is the possibility for a tremendous spike up in the price of energy. And this conflict in Ukraine and Russia, one, it doesn't really show any signs of abating, but even if it does, let's say the war comes to an end tomorrow. I mean, I don't think that's in the cards, unfortunately, but even if it were to, I don't think there's any possibility that we are going to go back to the old status quo in terms of energy. And so this sort of thing may be coming to a town near you. So if you live in a place where you require a lot of energy to stay warm in the winter, maybe you start looking at some things to prepare. Maybe you look at a wood-fired stove or something like that. I mean, I know that sounds kind of crazy, but I really do think energy prices are going to continue to spike, and we're going to all need to do what we can to get prepared. The reaction of the metals on this inflation news, I think, is just a sign of things to come. I think that precious metals are going to continue to move up higher as we get this inflation news moving forward, and as investors realize that the Fed is going to be either incapable or unwilling to fight inflation in a meaningful way. They're going to realize that it's one of the few places you can go to protect your purchasing power. And we've already seen a lot of commodities move up. Gold and silver have sort of been laggards so far, but that doesn't mean they're not inflation hedges. It just means that right now they have a lot more room to move up. And I think that's what they're going to do. Of course, this is not financial advice. I'm not telling you what to do. Do your own due diligence. But as for me, I think that the current prices in gold and silver are a steal, and I think they're going to be moving much higher probably before the end of the year. And so I think that if you don't move and take advantage of these prices, you might be kicking yourself later. And I'm going to have some new bullion coming in here in the next couple days. I'll do an unboxing video for you guys. I just think that we all need to be doing whatever we can to get prepared. Get ready to make yourself as independent of systems of support as possible. So get yourself some emergency food, maybe plant a garden, produce your own food, get yourself some kind of alternative way to keep yourself warm if you live in a cold place, because gas is going to be really expensive very soon, as is oil and as is your electric bill. And I just hope that everybody out there is getting prepared. I really want to say a big thank you to all of you for watching and continuing to support the channel. It means a lot to me. If you have any thoughts on the current inflation fight or any of the stuff I discussed in this video, please let me know in the comments below, and I will catch you next time. Thank you all very much for watching. Smart Silver Stacker